Welcome to Lesson 3 of Managerial Accounting, and we will be discussing Chapters 5 and 6 from your textbook. Chapter 5 introduces process cost accounting as opposed to job cost accounting. A process manufacturer is one that produces mass quantities of identical or very similar products, like bottles of soda or postal delivery of mail. To make clear the method, the book uses 3 cases of increasing complexity. Case 1 assumes no beginning or ending inventory and introduces the method called average costing. Case 2 assumes no beginning work in progress inventory, but does have an ending inventory of work in progress. This case introduces the 5 steps of process accounting and the concept of equivalent units. Case 3 uses both starting and ending inventories of work in progress and shows the effects of LIFO, last in, first out, and weighted average costing methods on the work in progress and the goods for sale accounts. When we introduce work in progress inventory, we apply the concept of equivalent units of production. For example, 200 units that are 25% complete are the equivalent of 50 units that are 100% complete. This allows us to assign costs to partial units based on the degree of completion, generally as estimated by management. Note that when we say that the weighted average and the LIFO inventory costing methods reduce taxes, that this is not strictly so. What does happen is that the tax savings is merely deferred to a future period when the lower price inventory will be sold. The advantage of deferring taxes is that the cash can be used as working capital until the taxes are actually paid. This is the equivalent of an interest-free loan. And so we like to carry forward taxes, but it's never possible to avoid taxes, merely to delay them. The chapter closes with a discussion of budgeted rates, hybrid costing, operation costing, joint costs, common costs, and standalone costs. We now turn to Chapter 6, which covers the subject of activity-based accounting, called ABC for short. Broad average costs, measured by a cost driver, tend to undercost and overcost different products that use indirect resources in non-uniform ways. ABC allows managers to divide production into a variety of activities, each with its own cost basis. This requires a great deal of extra measurement and record keeping that may or may not be effective. It is effective in the sense of controlling costs. Question is it cost effective? A single, simple, indirect cost pool system is examined first. Then additional cost pools are added to demonstrate the improved accuracy of a more refined system. The notion of cost hierarchy is covered. A hierarchy, merely different levels, which include unit levels or unit level costs, batch level cost, product sustaining costs, and facility level costs. Several pages then address the issues of implementing the ABC system. Alternative cost systems are compared and the benefits of each are discussed. A number of behavioral issues are presented and debated. Although ABC creates better information, it does come at a price of increased complexity. This means there needs to be buy-in on the part of both upper management and the employees, everybody in the company basically. And we need to look at at what cost does this increased information come. Finally, the authors turn to activity-based management. Here we will read about cost reduction and process improvement decisions. We will also look at design decisions and planning and management activities. We conclude with a short discussion of ABC in the service and merchandising industries. Be sure to read the chapter summary on page 231. It is presented in question-answer form and gives an excellent overview of the material. Feel free to bring your questions about homework from lessons 1 and 2 to class for clarification. Next week, we will be halfway through our session. Keep up the good work. Now is not the time to fall behind.